Hi, top of the day to you guys. This is Tijani. As a quick one, within the next couple of minutes, I want to walk you through what to expect in the market this week. So I'm going to start with DSY, and then from there we get to walk ourselves into um, some other assets. So taking a look at DSY, as at last week, we realized that the market had uh, a high at this point and a low at this point. Therefore, the other daily range for last week was bearish. However, a sell around this zone was expected, and then of course market got to that point and then later got it violated. So we now had a shift from bearishness to bullishness in line with institutional order flow this week. However, like I said, when market violates the daily range high, we expect the market to either make a move to the external range liquidity, which will either be the 1.127 zone or the 1.16 zone. So this week, currently after the market has validated this daily range high, we now expect this market to get to either 1.127 or 1.168. So we put our fib to just call out this level, and then you can see that we add the DSY having our external range 1.16 around this point 108.25 zone. So if you look left, you see that 108.25 zone equally mark out a psychological supply in this chart. Okay, psychological supply in this chart. So let's put that one in place. I will know, perhaps that's it. Psychological supply on this chart reside around the 108 whatever. So in this case, I will possibly envisage that we could see something like this: market giving a tap of this point, then get us what we call a change, a internal structure change of character. Then we could see a pullback, and then we could sell this market back to this level. And then this week, the market will pick up for a new trend because technically this market is now in a bullish zone. So but we still pay attention to last week daily range because we want to envisage the peak level the market should get to before a pullback should be seen for this new week trend. Mind you, if the new week now has a daily range equals from this to these levels, you can see I'm envisaging that the market should make move from here and get to this level, tap 108.25 zone, sell down, give us an internal structure change, and then you possibly you possibly will now find you possibly will now find you possibly will now find internal structure change as regards to what we have here, and then this will now give us an opportunity to sell this week towards the downside with a view of retesting this level. This level has a key zone at this point, point 1, point 2, and then point 3. Therefore, we expect a comeback to this level as a major flip zone. So we have a major flip at this point. So let's put this as a major flip, major flip at this point. Now, this is what I'm going to be playing with, and I'm going to buy. However, like I said, when the market give us a daily range, wherever you want to buy from discount and sell from premium or being equal, depending on the daily range structure that you have. So since we have a bullish daily range on DSY, I want to be buying for premium this week. I mean from discount this week. So I'm going to take my fib from here and then maybe towards this level, whichever the eye that is created, and then I'll possibly now have my equilibrium at this point. Hopefully, but conservatively, I'm going to be exiting my sell that I'm going to take here around this point. Market could get to this equilibrium before this bounce to the upside. And mind you, you can see that the equilibrium space has this structural block at that point, which might possibly be wherever. But conservatively, sell target is this, and then conservative entry for a buy continuation of this daily range should be around this point. That is around 106.35 zone for the week. And I hope this clarifies a whole lot of things. Now we have a possibility of sell to buy open float order on DSY dollar index. So we're going to equally have a buy to sell open float order on EU, which is almost 99% inverse correlated to dollar index, and also on GU, which is equally 76.7% inverse correlated with uh, with USD. So let's go to EU technically. So on EU, you can see the same, what I'm saying, inverse correlated, opposite to each other. We could see that the market had a structure to the downside this week. Of course, last week had this as our daily range, isn't it? So we now expect the market to get to 1.127 or the 1.126 to complete the structural flow to the downside. So our 1.127 is around this point, which market has already violated. So I'm going to be possibly expecting that the market should get to this 1.14 this week, and that is where we're going to be having our possible tap, and maybe this week market could go this way a little bit up, grab this liquidity, then form a new change of character, and then market will now go back up. Then, of course, what happens is that we now add our new daily range around this point, just as we expect opposite correlation to DSY. So I'll find my premium or my premium discount zone parameter. I'm going to be looking to buy or to sell at the equilibrium. Hopefully, the market could get towards this point, and then I'm going to be possibly envisaging if I could see a change of character around this point next week, or by Tuesday. I'm possibly going to take a buy from discount view on pullback into this zone, and then with that, maybe we could see a trade back into, sorry, I want to draw this well. Maybe we could see a trade back into this level, then we can continue our demisely sell opportunity in this market. Now, if you take a look at the weekly structure, you'll see that the weekly had a pullback. You'll see that the weekly had a pullback, like I said a while ago, and then this is our first push, our second push, and then maybe our third push we come and give us a whatever here. Mind you, we add a drop. This is part of my weekly outlook for last 2 weeks. So this is not, this drop that we saw this last 2 weeks is did not come to us strangely. As you can see, market had a break of structure at this point, breakout, pullback, then continuation. A new low is expected below parity around 0.9 0.9950 zone, and that is what we're going to be expecting in the EU market this week, and that settles it. Mind you, the reason why we're going to be envisaging this bounce is because the market has completed a three pushed cycle to the downside, and therefore Elliott call it wave 1, wave 3, wave 5, and then we possibly will see a rebound back to retest of this supply zone where we have our equilibrium waiting for us around the 1.0, a possible sell limit around the 1.1090 wouldn't be a bad idea, or let me say 75 wouldn't be a bad idea, and then stop loss a little bit above this level for the week, and then we could see a new structural low formation. But let's envisage a tap of this zone on Monday, that is almost around parity is around 1.00000, so, and then the market should bounce around parity this week, just 36 pip away. So when the market bounce, we should trade back to let me put number to that, label to this. So I'm going to be putting label to this. So that's it. That's where the market should bounce around this parity zone, that or 1.0025 zone, and then we set to this level. Then we now start our new sell order from this, and that settles it on EU. So let's take a look at GU. Like I said, it should be something similar to each other. So GU had this daily range as at last week. Of course, we know we have our high of the last two sessions as a marker. So the drop is not something that is under expected. Immediately this level was violated. Take a note, markets had a increase in volatility from this zone, and so immediately this market completely finish this level means that this liquidity is being neutralized, and therefore this is liquidity surge creating a void. So immediately this come down and trade below this level, it means that the whole order of surge in this level is just a trap, sell a buy climbers move, and therefore immediately this level is taken out, market return to the breaker, and then the rest is story. Now let's take a look at what to expect this week, considering that our daily range is now this that we have here, high and low. Of course, you and I knew that this market had the last break of structure at this point, but in this case, if you take a look at this level, we had a test that we have a test here, we have a test here, so we have a three-time test giving us a major flip, isn't it? So if we have a major flip there, a possible breakout, pullback, continuation wouldn't be under expected. So a possible sell limit around this zone and then a sell to the continuation of downside wouldn't be a bad idea. However, since this is our daily range from high to low, I want to, and this is our last 2 week daily range, I want to envisage where our 1.168 level will be so that we don't just start looking for a bounce from a no man's land. So I just put it here. You can see that our 1.168 occurs at 1.1820 zone. Our market is already giving us a possible fakey tail around this zone. So hopefully we're going to look for find a bounce. Let me say we're going to find a bounce and then an internal structure change of character, maybe like this. Then we'll find our low risk entry. Then we take to this level. Then we'll take a this sell, and that is our trade plan on GU for the week. And I hope that plays out accordingly with time. However, you might want to go to the lower time frame to find that, and then we'll go. That's what we're going to be discussing in details during the DMR tomorrow, as far as I'm concerned, if time permits and we have the audience in place. However, let's go to gold as a quick one. So on gold, you can see that market had structure. This is our daily range for last 2 weeks or last week. This is our daily range market movement from year to year. So we had a daily range low violation around this point. Okay, so if we had a daily range violation around this point, what does it imply? Market should continually drop to the external range liquidity of the last 2 week range, and that is what we have at where around, say we had it around this point. So I'm going to project this sideways to the left side and see if we have a structure that coincide with that movement. So in view of this, you can agree with me that we had this structural weighting around this point. So this is a possible previous resistance violated becoming support. So market should inadvertently drop to 1739 or 40 zone this week. And then once this is done, our new daily range will be established to be something like this. So if this is anything to go by, we're going to be expecting a bounce here, a market come back to this level, giving us a retest of a FTR because this is an FTB. This is the breaker. So we either could see this sell from this level or this level, but I'm going to be putting my confidence on the sell from this level. Now, since this is our daily range, our my 50% discount zone buy opportunity will possibly present itself around where. So let's put our FIB. I'm looking at market comeback towards this level to complete this structural drop around the 1.27. Then I'm going to make my 50% mark point around this point. So this FIB that we drew here is already useless. So the equilibrium is going to be possibly awaiting us around 1773 zone. So in this case, let's take out the ambiguity. So I will just take, okay, these are structures that are no longer useful. So change of signal demand engulf at that point, a market back to, this is the breaker, I mean the block out in the premium, and then a sell from premium is expected to give us a market run back towards this level. Mind you, this is going to be our daily range high, and these are going to be our daily range low. Hopefully we see something like this. Okay, like this, then we're going to be selling. So this will now use this daily range structure that is here to project the external range liquidity, and that will be at 1721 or 20 zone, and that will not be anything bad. Of course, if you take a look at that, that becomes a block of demand at this point. So if you take a look and project this demand block to this sideway, you can see that it forms a confluence with this Fibonacci that we just map out here. So this becomes our trade plan on gold. Now, in overall market playbook, this will now become our first push, our second push, and then our third push will now complete a cycle movement in this market, and that settles it. So this becomes our trade plan. A possible sell limit around 1773 zone with TP around 1725 zone, and a possible buy, that's sell from here. Let's put it here. A sell from here, buy from here. If you see the structural we need to see a change of character, and then buy from here, sell from here, and then TP overall from here around 1725 zone. That settles what I'm going to be looking out for in gold market this week. So a quick one, let's take a look at crude oil, and then we call it a day. So on crude oil markets, market should possibly on crude oil, this is what we had. So I'll clear everything and bring this up into understanding. So on crude oil, we had this structural formation giving us our daily range equals to this high and this low. Okay, so of course market had a break of structure around this point, and therefore I will take my 50% marker to look for a sell in the premium. So I haven't done this. This become my 50% marker, and the first block inside the premium happens to be at this point. So it's not under expected that we saw this market reacting to structural formation around this point, A, B, and then maybe C. So this week we want to see a possible new low formation. If this level is taken out, the market should target the external range liquidity at 1.127 of this range, right? So let's take away the structures that are not necessary. So to look at a possible target for crude oil this week, I'm going to project the external range liquidity of 1.127 around this point. So I'm going to be looking for, because we already have a liquidity grab inducement or at this point, and the market confirmed. So market is already turning down, but maybe one way or the other, the market might have to do a pullback on Monday before this sell will now continue, and then this is going to be our trade plan for Monday. And I hope this clarify. How do you know that the market should play around this level? If the daily range low is violated, market will get to the external range liquidity at 82.71 zone. So a plan to sell around 89 the 90 zone. Market could go to 90 zone around this point. Let's put a label to this. All right, so I'm sorry, it looks maybe like 1965 zone. If market comes back again, then it's a good low risk entry for us. Then stop loss can be maybe at, yeah, 90, that's 91.79. Then TP1 should be around this point, and TP2 should possibly be around 93 zone, and that settles for crude oil. So for those that trade the US 30, possibly we want to say, okay, I don't know what is happening in the US 30 market, but I can see that the bullishness in the market is still very much intact. However, a quick one, we want to remove this. So we want to remove this. We want to say our daily range from the weekly structure is still very much bullish. So if the daily range for the weekly structure is still very much bullish, I want to say from here, market had a rally to this point, and therefore the last break of structure occurs at this point. So if the last break of structure occur at that point, so I want to say, okay, I want to possibly look for a buy in this market this week. And at what point am I going to buy? I'll be looking to buy in the discount zone. So I'll put my Fibonacci to mark this 50% range out to determine my premium zone. Bring it up here. This is the weekly for weekly cycle analysis, and then I'm going to be possibly looking for a possible buy at the first block inside my discount zone, and that settles it. So crude oil might possibly drop to this point, make a pullback, grab liquidity at this point, then tap, then we could see a rally in that regards. I'm sure you understand that we had a block here just below the equilibrium, and then that is where our average to buy order is. This is the 2 week range, and then that becomes our daily range that we're going to be playing with this week, and that settles it. However, on a quick one, if you take a look at the everything points bullish to this week, monthly cycle, markets are just taking out this high. So um we talked about the market come down a little bit, so maybe this 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 kind of structural formation, I'm sure you get that microscopic view of looking at it, which I just did there. So with that being stated, so we just bring this into this level, and then we look for a tap and then a run. And that settles it. Um, American economy is not looking good, but the Fed promised to increase rates consistently, and that is enough a reason for the investors to possibly find themselves in the love for dollar and then the investing interest. So let's take a look at the fundamentals this week. For this week, fundamental preview, let's say Control N, uh, Control N, new tab. So I'm going to possibly open Forex Factory. So for this week, I'm going to go to calendar. I'm going to be expecting nothing magical other than um, a possible a lot of euro news on Tuesday, and then the forecast for this euro news indicates negativity from 53 to 52, 49 to 48 to 49 to this, which means that euro is very much expected to be weak this week. Hence, the forecast of the economy is bad. That's what it means. So you can use this forecast to gauge the sentiment of investors as regards to the economy of euro. So you start preparing your mind to sell euro for the week. Now, 52 to 51, 52 to 50, 51.6 to 52, and then maybe USD is equally expected to appreciate from in PMI from 47 to 50, means that dollar is expected to be bullish. Hence, investors is placing a premium on the USD as regards this. Now, if you look at this GDP, a little bit of improvement from minus 0.9 to minus 0.8, and therefore this is a little bit of improvement you can see for the dollar. And then also the last but not the least news for this is the cost PCE, which is, you want to learn that what it means, just come to this, you can read that. I'm sure you will get understanding as regards that. You can see the flow of chart as what it is. So this is the only negative news for dollar, and this come on Friday. Then above all, which is the space Chairman Powell's speech. This speech should possibly be more or less something that we tell eh, tell more positivity about this dollar, and then that settles it, right? I'm sure that this should end our meeting for today. Thank you very much, and God bless you. Stay blessed and enjoy your new trading week. Bye bye. Tijani says, peace be unto you. Bye.